Good afternoon, everyone. So we have the Nifty chart in front of us. Let's analyze what has happened. At 18,886 is when the market broke out, going into all-time high. There was a gap up, and there was practically a vertical rally all the way for almost a week. Last Friday, we saw one fall, and after that, the market was in this range itself, and it wasn't moving out of this range. A correction to the near averages or the mean was needed after such a strong run up. So ideally, market should have corrected up to 19,200 or 19,100 before it moved back into all-time highs. But instead of that, today, backed by the global cues, market opened up quite strong, broke out of the 19,523 range, and was above that for quite some time, and eventually gave up the gains. Now, this is a breakout failure. What can happen now is if yesterday's low, that is 19,360, is broken, then we may see further falls up to 19,300 and then 19,134. 19,134 is because it's a 20-day average, and then 19,000, which also happens to be a very strong support. If these levels get tested now, the rally from there on will be much smoother and better. A breakout from here without a proper retracement will only make trading difficult because it will always remain on a verge of correcting going forward. So from here, certain sectors will continue to outperform. Today was one of the days where IT has held on really well. We need to see whether IT continues with the momentum. Private banks have done better today. PSU banks have corrected. So let's see whether the banking index will hold from here or not. The only cause of concern for me with the banking index is while the higher time frames continue to be momentum, the daily today had tried to cross 60 RSI, but it failed and it has closed below the 60. So daily is in a sideways or correcting mode, and overall it remains in momentum, so we don't have much to worry about. Next few days will be a little difficult to trade because market will remain in the range bound. Thereafter, we need to see what to do. We would advise, we have winded up a lot of our positions. We would not want to build up immediately. It is safer to sit on a little cash, wait for certain confirmations before we go all in again. Having that patience and watching the market closely is needed because we do not know how long it will take for the market to move out completely out of this range. Today, the broader market breadth was quite negative. If it remains like that, it will be very difficult to trade because a lot of stop losses will keep getting triggered. So rather than being an aggressive trader, let's have patience and sit and watch the market for confirmations. Thank you.